Good morning. Are you there? Okay, I have to let you talking with me. Today is the April the 8th, 2025, 9:40.
Sure thing. Let's review your trading strategy around the level 103.975. What specific aspect do you want to focus on today?
Today I'm looking for recap and trying to follow the market from yesterday. I trade CAD Swiss franc, but I pushed the wrong button. Instead of put CAD Swiss franc buy, I put USD Swiss franc buy, and then I follow along things with that, and then the price doesn't move anywhere, just go sideways a whole day, and I have to put up fight because I get in the first position wrong, and then I have to protect my loss by hedging, and it's very a tough fight, but I end up gaining like not lose, but I gained like 10% of the winning, even though it's a sideways market, it's a wrong direction, and I'm trying to fight my best to practice my hedging technique to protect my loss.
It sounds like you had a challenging day with the wrong trade entry, but you managed to protect your capital using hedging techniques. Even in sideways markets, it's great that you found a way to end up with a positive result. Practicing and refining your hedging strategy is crucial. If you'd like, I can help you analyze what went wrong with the entry or how to better align your trades in the future. How does that sound?
Yeah, that sounds good. Right now I'm watching on the other chart, the other screen. I follow in US Swiss franc, and the sister pair is CAD Swiss franc. And right now at 5 minutes time frame across the board, Swiss franc seem to let it go, let the thing float without pushing more gas into the market. So US Swiss franc is moving up north, across the board, moving up north now, but they only move into the range, new range that they came to yesterday, trying to maintain this high level of what they make, and they're gonna struggle because
It sounds like you're observing a potential range formation with the USD CHF pair, where the price is moving up but struggling to break out of the recent high level. In these situations, it might be useful to keep an eye on key support and resistance levels within the range. If the price continues to test the upper boundary without breaking out, it might indicate a consolidation phase. Watching for strong momentum or a breakout above the range could provide clearer trade opportunities. Keep monitoring the price action and adjust your strategy accordingly.
Yeah, I think they're very tough today. The news is not so many news today for propelling the gas to this market. And yesterday high, it was happened with the big long green candle, and then end up after they reach to the high level, and the wick on the top of the green candles very long, and show that the seller up there reject this price for the buyer to get further. And then since then they drop back 50% and use that 50% as they respect the support, that they maintain this ground, not lower and not higher. Now they are in the middle of no man's land, in the 50% fight squeezing kind of things, and there is something not going on. The volume is high, the stochastic up at 80%, and pointing downward to fair price value 50%. The MACD is on the top of the mid line 32 MA.
It seems like you're observing a consolidation phase after that significant green candle, with a lot of indecision in the market. The long wick at the top of that candle suggests strong selling pressure at higher levels. When you see the price respecting the 50% retracement level, it often acts as a significant support or resistance area. Given that the stochastic is pointing downward and the MACD is near the middle line, it suggests potential uncertainty or a possible continuation of the sideways movement. Given the current market conditions, it might be wise to wait for a clearer breakout signal or confirmation before entering a new trade. Monitoring volume and price action closely will help you determine the next move. Keep an eye on how the price interacts with these key levels to guide your trading decisions.
So, right now it's 45 minutes after London Open, and I only see that volume is high, but the price doesn't go anywhere. Everything's high in volume. It's just not go anywhere. What should I do?
In a situation where there's high volume but the price isn't moving significantly, it usually indicates a period of consolidation or indecision among traders. Here are a few steps you can consider. 1. Wait for a breakout. Since the market is in a consolidation phase, it might be best to wait for a clear breakout above resistance or below support levels. A breakout with increased volume can signal a more directional move. 2. Monitor key levels. Keep an eye on support and resistance levels. If the price breaks through either level with strong momentum, it could provide a good trading opportunity. 3. Use indicators. Consider using technical indicators like RSI or MACD to identify potential overbought or oversold conditions that might signal a reversal or continuation. 4. Stay patient. Sometimes the best action is no action. If the market is not providing clear opportunities, it might be best to step back and wait for a better setup. Patience is key, especially in periods of low volatility.
Yes, I look at the RSI, New Zealand and Australia now on top of the 80% at the pointing up. That means Australian and New Zealand is strong at this hour chart, above of all every pair. Let's go and look for the Aussie pair, 1 hour. Go to the chart across the board. I just want to scan to see who is the most pair that people trade at these hours, because Friday the last day of the week for Forex, so I want action today. Scalping is the main idea.
Since you're focused on scalping and looking for action on the last day of the week, let's focus on the Australian AUD and New Zealand NZD pairs. Both currencies are strong right now, and there may be some opportunities to capitalize on their movements. Here's how you can approach this. 1. Scan major AUD and NZD pairs. Look at pairs like AUD USD, AUD JPY, NZD USD, and NZD JPY. Check the price action and see if there are clear patterns or setups. 2. Focus on scalping opportunities. Look for quick entry and exit points, especially around key support and resistance levels. Since it's Friday, the market may have some end-of-week movements. 3. Monitor news and events. Although there might not be major news today, keep an eye on any unexpected events that could impact these currencies. 4. Stay alert and flexible. Be ready to adapt quickly to market conditions. Scalping requires fast decision-making. By focusing on these pairs and applying your scalping strategy, you might find some good opportunities today.
Yeah, looking for correlation on Australian across the board. If Australian and New Zealand is strong pair today, so I'm looking for upward movement. And what I can see here from the chart, the most up running is also
CHF is the most upward moving pair. It could be a good opportunity to consider a long position, especially if it aligns with your trading strategy. Here are a few things to keep in mind. 1. Confirm with technical analysis. Check the key support and resistance levels on the AUD-CHF chart. Make sure the price is breaking out of a resistance level or showing strong momentum to the upside. 2. Watch for confirmation. Look for
I'm sorry, but you've hit the daily limit for advanced voice. You can switch to standard now to keep chatting.
Alright, nice to have you back. I will do it right away. Where are you? I couldn't find you. Okay. Right there.
It seems like you're affirming something. Could you
Yeah.
clarify what you're referring to?
I am now trying to scan and looking for the best price. The best pair to trade today is Friday, the last day of the week for Forex. And yesterday I was trying to get in one position on catch Swiss franc, but catch Swiss franc I push the wrong button. I get US Swiss franc instead, and I get into the loop of losing, and I fight my way back to use the hedging technique that to protect my loss. And I didn't lose anything yesterday, but it's just annoying that sideways market put me into the position where I have to sit tight, uncomfortable, to get in and out just to protect my loss. But anyway, I end up make somewhat money too, but not so much. Let's go to Swiss franc 5 minutes chart, and I will explain what that was yesterday. And today we will trying to do following up the story. You know, I get in with small amount of lot size to test the market and be able to follow the market, the rhythm. Here we are. US Swiss franc and CAD Swiss franc are in the sideways market and just pull. I don't know if it's pulled back or it's going up north. Okay, reach the resistance of this selling both pair that I monitoring on my radar. The other pair is like to looking for correlation so far. And
I see you had quite the challenge with US Swiss franc yesterday, but managed to use hedging to protect your losses. That's a good recovery strategy, especially when you're working with small lot sizes and testing the market. For today, focusing on US Swiss franc and Canadian Swiss franc in a sideways market is a smart move. Since both pairs are showing similar behaviors, it's important to keep an eye on the key resistance levels for both. If you're unsure whether it's a pullback or a move up north, check for signs like momentum shifts or price action near those resistance zones. For correlations, you might want to look at other pairs involving the Swiss franc or the US dollar. How are you seeing those pairs reacting compared to US Swiss franc and Canadian Swiss franc? Anything standing out?
they are now is 56 minutes after the London Open. So this hour, after 1 hour, the big player has moving in something. I see the sign of the big green candle moves, and it looks like something happening. Volume big, MACD is big on the top side of MACD, on the up above the 36 and 56 MA, and price is moving across the board. But not so much on the other side, but everything moving. It make me see that US is strong, CAD is strong, GBP is strong, Euro strong, moving up, US Aussie Swiss franc strong, moving up, New Zealand strong, moving up. Our correlate JPY Swiss franc JPY moving down. This is different direction. So basically, Swiss franc let the foot out of the gas panel and let the price pull back for
It sounds like you've spotted some solid movement after the London Open, with strong price action and volume across several pairs. The big green candle you're seeing is a good sign of momentum from the big players, and with MACD on the upswing, it confirms that the market is showing some strength. With US CAD, GBP, UR, and NZD all moving up and JPY moving down, you've identified a good set of directional moves. This shift can give you a clearer picture of where to focus your trades. It's interesting how the US Swiss franc USDSF is showing strength, while the JPY pairs are headed in the opposite direction. If you're considering entering a position, watching these correlations could help you gauge the overall trend. Since the US and CAD are showing strength, you might want to look for opportunities on US CAD, or even consider pairs that involve those currencies, while avoiding the JPY pairs for now, given their divergence. Are you looking to capitalize on the momentum, or are you still looking to protect any potential losses from the sideways movement earlier in the week?
For me, I trying to top-down approach. Why is this happen today? Because yesterday I thought CAD will move down, but it didn't. Instead it moved up, but I didn't push the CAD Swiss franc to buy, but I put US Swiss franc. But anyway, I thought both pairs going down, but it's going up. And I trying to looking for the clue. Why is that? By looking for the CSI monthly. CSI, who is the top of the close to the 80% is Japanese yen. This is monthly, pointing up almost about, they reach about 70%. That's Japanese yen on monthly, the highest score. They are very strong. That's why I'm with Japanese bank. Everything they interfere with this forex, because Japanese has something to do with economics. So they defense the value or safe haven, I don't know. And that's why Japanese yen is strong. And I'm not gonna fight with them. But
it sounds like you're using a solid top-down approach, which is key for making informed decisions. Yesterday, you expected CAD to move down, but it moved up, which can happen, especially in the unpredictable market environment you've described. The important thing is that you're analyzing and learning from these shifts, even when things don't go as planned. Looking at the CSI, Currency Strength Index, for the monthly time frame is a great way to gauge the overall strength of a currency. If the Japanese yen is at the top with a strong monthly score reaching 70%, that aligns with its reputation as a safe haven currency. The strength of JPY can be driven by global risk sentiment, especially when there's economic uncertainty or financial instability elsewhere. The yen often appreciates in these conditions because investors seek safety, which could explain why you're seeing strength in the yen, even when other pairs may not be moving as expected. It also seems like the Bank of Japan, BOJ, and their policies have a big influence on the markets, especially since they have such a significant role in the global economy. If they are taking action, or their expectations of policy changes, that could shift the market dynamics, making the JPY stronger despite other pairs' behavior. Is this helping you piece together why the market acted the way it did? Or do you feel there's another factor you might need to check?
There is, I trying to figure out why my predict was failed yesterday. Why is become CAD and USD strong, and the Trump protesting new make dollars weak, but why is moving up? That's why I say it should going down according to the politic news.
It seems like you're trying to tie together multiple factors, both technical and fundamental, to understand why your prediction didn't play out as expected. Political news, like protests, can certainly affect market sentiment, but sometimes the market reacts differently from what we might anticipate, especially in the short term. The strength of the USD could be linked to other factors like economic data or central bank actions, even in the face of political unrest. For instance, if there's optimism about the US economy, or if the Federal Reserve's stance on interest rates remains hawkish, that can provide support for the dollar regardless of political events. Even if protests or negative political news are happening, they might not always outweigh the broader market trends or expectations of economic growth, especially if those in power manage to control or limit the impact of such events. Additionally, the strength in the USD and CAD could be tied to risk sentiment. When markets are more willing to take on risk, currencies like the USD, which often benefits from safe haven demand and interest rate expectations, can perform well. Meanwhile, despite political unrest, the market might still be focusing on the bigger picture, such as the recovery from the pandemic or other economic indicators, pushing the USD higher. In this case, it sounds like the USD was stronger due to underlying factors, even though the political situation was raising concerns. Does this help explain why the USD might still be moving up despite the news? Would you like to dive into another way to filter out noise from such events?
Yeah, I'm trying to do it now. I'm trying to load up my CSI on the chart, but it needs a little bit technique.
It sounds like you're in the process of loading up your CSI on the chart, but there might be some hiccups. Are you running into any issues with the chart setup or indicators? I can help guide you through the process if you need it.
I hope I can manage this. Oh, I can't. But anyway, that's need to be prepared. I'm have a lot of work to be doing this beforehand of recording, but I have not so tight, not so much time. Okay, now we are at the US switch from 3-minute chart across the board. Since yesterday I following this USD pair, US switch from, I should go to look at the US across the board too, and CAD across the board. I haven't time to do that yet. And now after the London Open, it looked like the intention of the market is moving up north. Now we observe that we are pullback buyer trader, so we wait for the pullback and then we will think about accordingly if the pullback is safe to get in, or is to pullback is reverse according to the momentum. That's how I try to do now.
It sounds like you're managing your time well, despite having a lot of work to prepare for your recordings. Right now, you're focusing on USD Swiss franc and keeping an eye on the broader US pairs, which makes sense, especially after the London Open. You're observing that the market seems to have an upward intention, and now you're waiting for the pullback to see if it's safe to enter or if it could reverse. Pullbacks can be tricky to navigate, so it's smart to wait for confirmation before entering. Keep an eye on the momentum and watch for signs like a slowdown in the pullback or a shift in volume to see if the market is likely to resume its upward movement. If the pullback appears too strong or shows signs of reversal, you might want to hold off until you get more clarity. Are you considering any specific entry criteria once the pullback happens, like certain candlestick patterns or key levels?
When I look at
That's okay. Sometimes the market doesn't give clear signals right away, which is why it's important to stay patient and let things develop. If you're not sure about the pullback, you could watch for signs of indecision or confirmation, like a doji or pin bar on a smaller time frame. If you see the pullback losing momentum and price starts to push back up, it could be a sign to enter. Alternatively, you can wait for the price to reach a key support level or for the MACD and volume to show stronger confirmation of the move. Does that approach sound like something you'd consider, or are you just going to play it by ear and see how things unfold?
I I have to look for correlation because right now the big long wick green candle yesterday they make the highest of yesterday. That's long wick of the green candle mean the rejection. So when the rejection come, I have to go fight to that rejection or
I see what you're pointing out. The long wick on the green candle from yesterday is a strong sign of rejection, which could indicate that price reached a point where it faced significant selling pressure. When you see that kind of rejection, it often signals a potential reversal or at least a pause in the upward movement. Given this, looking for correlations across other pairs can help you confirm whether this rejection is a sign of reversal or if it's just a temporary pullback before continuing upwards. If the other pairs show similar behavior, like a rejection at a key level or a shift in momentum, then it could help you decide if the market is likely to reverse or keep pushing higher. Are you seeing similar rejections or signs of rejection in any of the other USD pairs you're tracking? That could give you more clarity on what might happen next.
yeah. I try to get the CSI on.
It sounds like you're starting to piece together the overall picture. If you're seeing similar rejections in the other USD pairs, it could help confirm that there's a strong level of resistance or a shift in sentiment. It might mean that the market could either consolidate more or reverse. At this point, waiting for confirmation from your correlation analysis seems wise. Once you see a clear pattern in the other pairs, you'll have more confidence in your decision about whether to enter after the pullback or wait for another setup. What are you seeing in the other pairs? Any patterns that align with your initial observations?
Yeah, look, I got the CSI online now. I will check at the 5 minutes what is the candle gives on this moment. Who is the top of the CSI? Japanese is strong. And what pair that I should take? The strong pair? If I think the Japanese
Great.
is
Now that you have the CSI online, you can see the broader strength and weaknesses of the currencies. If the Japanese yen is at the top of the CSI, it suggests that JPY is currently strong, which could influence the market, especially if you're watching USD pairs or JPY pairs. Checking the 5-minute chart for candle patterns, like a strong rejection candle or a breakout, will give you some more context. If you're seeing a significant move in the direction of JPY strength, it could confirm the momentum and help you gauge whether to enter the market after the pullback. It's also important to see if the US dollar is showing strength or weakness compared to JPY and other currencies. How does the current candle on the 5-minute chart look? Any clear signs of continuation or reversal based on the CSI readings?
Let's just a sec. Okay, I'm back to the major chart across the board. And they start to pull back on the US Swiss franc and CAD Swiss franc. They pull back and respect the support, not yet bridged back down to test the guy who started. Euro Swiss
Got
franc.
it.
Yeah.
So it looks like both USD Swiss franc and CAD Swiss franc are pulling back, but respecting support levels, which is a good sign. The fact that the price hasn't yet tested the low where the move initially started could suggest that the pullback is still within a range and might not be a full reversal just yet. If these support levels hold and the market doesn't push much further down, it could indicate that the initial trend might continue after the pullback, especially if you're seeing confirmation from volume or other indicators like MACD. Are you looking for a potential entry once the pullback completes? Or are you waiting for additional confirmation to make sure the support will hold and the upward momentum will resume?
If I count the ignition of the yesterday low to the yesterday high, the distance between this high and low is where the price now at the middle. So it's no man's land, no direction. Even though the buyer.
You're absolutely right. Being in the middle of the range between yesterday's low and high means you're in a no man's land zone, where the price hasn't clearly decided which direction it wants to go. This can make it tough to enter with confidence, as you're not near a clear support or resistance level, and the market could move either way. Since you're in the middle of the range, it's often better to wait for price to either approach the lower support or the upper resistance before considering an entry. This would give you a more favorable risk-to-reward setup. If the price bounces off support or resistance, it gives a stronger indication that the momentum will continue in that direction. Do you plan to wait for the price to reach one of these key levels before deciding on your next move? Or are you considering any smaller, more cautious entries based on the price action you're seeing?
I have to wait for the price action to show me direction first. Right now, if I get in, I will go in the same like yesterday, like get into loop of range. Price going nowhere, and I thought they go. I push more, add more position. Oh, but then they didn't go anywhere.
Understand what you said.
I said that yesterday I was in the loop of the price going nowhere. I was lost, and then I tried to protect with hedging. I went in somewhere and yesterday low, somewhere yesterday low, or somewhere in the middle. But anyway, I was in the loop of the price going nowhere and drive me crazy with this long big green candle and make me have to do something, and I can't take anything more than just a small benefit yesterday.
It sounds like yesterday was a tough situation for you, being caught in the loop of sideways price action. It can definitely be frustrating when the market isn't moving as expected and you're left trying to manage positions that aren't going anywhere. Those long green candles can be especially challenging, as they often create a sense of urgency or FOMO, pushing you to act even when the market isn't showing clear direction. Hedging can be a useful strategy in such situations to protect your capital, but I understand how it can also feel overwhelming when you're stuck in that kind of environment. It's good that you were able to manage the risk without taking a significant loss, but those sideways markets can really test your patience and discipline. If you find yourself in a similar situation again, it might help to remind yourself that sometimes the best decision is to just wait it out and avoid overtrading. This way, you can preserve your energy and capital for the next more decisive move. How are you feeling about today's market so far? Does it feel like you're in a clearer position to act, or are you still seeing the same kind of uncertainty from yesterday?
Today I like to...
Sorry, I'm having issues right now. Could not understand what you said.
Today...
Sorry, I'm having issues right now. Could not understand what you said.
Today when I look at the small area, not open to the big full chart, I see that the buyer come very strong. But when I open a big chart to see everything, it's like they're still in no man's land. That's to look at a small area like this, small information, small data, square in. It's just a certain area. It make you fail to design what is the whole picture is all about. So it's better to open it up bigger, and then I can see more clear picture that every pair now stay at the same correlation mode, that they're waiting for something and they're going nowhere. Same price yesterday. I'm glad I'm out of that loop of sideways market yesterday. Save and make a small profit from there.
Sorry, I'm having issues right now. Could not understand what you said.
Yeah, yesterday was catastrophe. Let's look at the
It sounds like yesterday was quite a challenging day for you. It's good that you're ready to look at things again today with a fresh perspective. What are you looking at now? Would you like to dive into a specific chart or pair, or are you focusing on any particular setups today?
I looking at 1 hour today as the hike is my universe above, okay? And then I will scout and using 1 minute, 5 minutes or 3 minutes to precision. My trading page, let's say I move it down to 15 minutes, okay? Today is Friday, and Friday is the last day I need to scout. I'm not gonna take a swing long-term trade. I'm now looking for Japanese yen on currency ally. They look like not on the top of the chart. There is no.
Got it. It sounds like you've got a solid plan for today, focusing on the 1 hour chart as your primary time frame and using the smaller time frames like 1, 5, or 3 minutes for precision entries. Since it's Friday, you're not aiming for long-term swings, just more tactical, shorter-term trades, which is smart. Focusing on the Japanese yen is also a good idea, especially with the yen showing strength in the CSI. Do you have any specific JPY pairs you're eyeing today, or are you planning to look across a range of them to see where you get the best setups?
I look at the CSI now. Japanese yen is deep to the fair value price. USD is up to the 80% price. So at this 5 minute chart, and I'm at 15-minute chart, I look for currency array to looking for the most top pair that training is New Zealand Swiss franc. I maybe go to look at New Zealand Swiss franc since I already in Swiss franc mode. 3 minute chart. New Zealand Swiss franc is on the top of the array. Say that their most running trend is this guy, and they almost come to they came to the resistance where is 50% a little bit above the 50% from more or less, but they are look more training run. Is I count it's not clear side, it's 50% no man's land area still, but stochastic is pointing down, and the MACD say they totally are no power. They're sideways channeling up or training up, slowly creeping, gliding inch by inch, not like a top trotting, throttle running up. But this is array say.
It sounds like you're doing a great job of analyzing the situation using the CSI and a mix of indicators. The fact that Japanese yen is near fair value while the USD is pushing up to the 80% level is significant. In terms of New Zealand Swiss franc, it's interesting that it's showing up at the top of the currency array, but it all seems like it's approaching resistance and is in a bit of a no man's land zone around the 50% level. Since you mentioned that stochastic is pointing down and the MACD is showing weakness, it suggests that the upward momentum might be slowing down or even ready to reverse, which is important to keep in mind. The slow creeping price action you're seeing might indicate consolidation or a slow grind upwards, but with low momentum behind it. If you're considering entering, it might be best to wait for a clearer sign of rejection at the resistance level or some confirmation of a potential pullback. This could be a small break and retest, or a stronger reversal candle pattern forming at that resistance. How are you feeling about this setup? Is it too uncertain, or are you ready to take a small position to test the waters?
I'm look at 15 minutes.
I'm really glad to hear that. I'm always here to help you out whenever you need.
I'm looking at the chart. They are now active. Volume high, everything active because of the the first hour and 22 minutes past, London open. This range has been going on for a while and going nowhere. All I see is the green try their best, everything they in the control, but they are at the top of the range and they could break this range or not. I don't know. The seller is also try their best, especially Aussie Swiss franc. That triple rejection, double top on the New Zealand, triple on the Aussie Swiss franc and Euro Swiss franc.
It sounds like you're watching an exciting market move right now with high volume and a lot of activity. The fact that the price is at the top of the range and showing signs of both buying and selling pressure means there's definitely potential for a breakout, but it's still uncertain. The green candles trying to push higher could signal buyer control, but at the top of the range, it's a tricky spot. Either a breakout or rejection could happen. The triple rejection and double top on the New Zealand Swiss franc could be a strong signal of selling pressure, especially if those patterns hold and a strong rejection forms. It's a good sign if sellers are making their move, but you'll want to confirm that they have the momentum to push through. If reversal or continued sideways action. How are you planning to play this? Are you thinking of waiting for a clearer breakout confirmation or looking for signs of rejection before entering?
I still waiting for a little bit more clear.
Great to hear you're still with me. It sounds like you're in a critical spot with your analysis. Are you seeing any signs that the range might break, or are you still watching for confirmation?
I still looking on my cockpit where I can see heat map and everything without go to the chart, but just to see everything first, I'm looking for the top side of
That sounds like a solid way to stay on top of things without getting bogged down in the charts. Using your cockpit setup with a heat map and other tools gives you an overview of the market activity, helping you spot trends and momentum shifts quickly. It allows you to make decisions without needing to dig deep into each individual chart. How's the heat map looking right now? Are there any pairs standing out to you as particularly active or showing clear trends?
Okay, I add 4 hours, and the 4 hours say Euro Aussie, Euro New Zealand on the top side. That Euro are strong to this, according to this. Euro vs Aussie, Euro vs New Zealand, GBP Aussie. This is the top running up that are strong pair, Euro and GBP on the 4 hour time frame. But today we trade 5 minutes, 4 hours, just to keep that in mind, that who is strong pair. Well, I'm going down to 1 hour now, or 15 minutes now. Let's see what it gives. 15 minutes is still Euro Aussie and Euro New Zealand. Euro Aussie, Euro New Zealand, GBP Aussie and Euro GBP. We are at Euro and GBP things, but to look at the news today, and it's not very good news for let's go to the news. The news is New Zealand business, what is it, confidence from they got what I mean my glasses.
You're observing that the euro and GBP are strong across multiple time frames, particularly against the Australian dollar and New Zealand dollar. However, recent news about New Zealand's Business Confidence Index, which rose to 58.4 in February 2025, indicates economic optimism. This could influence NZD pairs. Given this, are you considering how these economic indicators might affect your trading decisions today?
That's why the New Zealand has a good positive news from 16 previous and actual 19% on business confidence Q1, and Japanese yen is previous 1.95 T and actual 2.3, so they are positive new.
Ah, I see what you're getting at now. With New Zealand showing positive news on business confidence, actual at 19%, up from 16% previously. It seems like the NZD is gaining strength today. On the other hand, the Japanese yen's performance, especially with its earlier figure of 1.95 te, is another key factor. Given these factors, the New Zealand dollar might have some upward pressure, which could affect your trade with the NZD pair. With the yen remaining strong on the CSI, you might also consider the relative strength between the two currencies when making your entry decisions. It seems like the environment is still a bit mixed with both positive economic news and currency strength shifts. How are you adjusting your approach based on these updates?
That's why the New Zealand coming strong on the currency array, and on the top is Euro Aussie, Euro New Zealand, GBP New Zealand on the 15-minute chart. So New Zealand was weak, but they come up a little bit strong because of this positive news, and Japanese yen also, but at 15 minutes I don't see Japanese yen on the first top rank. They at the Swiss franc is JPY is the first one, number 9 on the list, Euro JPY number 10. So I get confused. Too much information. Anyway, we go to the chart, and before I go, I looked 5 minutes. We'll look at 5 minutes. Who is the top Euro Aussie?
It sounds like there's a lot of moving pieces, especially with the New Zealand showing some strength after the positive news, but the yen staying relatively weak in the shorter time frames, 5 to 15 minutes. The conflicting signals can definitely make things a bit tricky. With so much information coming in, it might be helpful to narrow your focus to just a few pairs that align with your strategy for today. Perhaps stick to those EUR-NZD, EUR-AD, and GBP-NZD pairs where the trend is clearer. This way, you don't get overwhelmed by too many pairs showing conflicting signals. It's always about finding the right balance. Are you seeing a clearer setup for entering a trade on any of these pairs, or still looking for more confirmation?
I can see that the buyer trying to move the price away from this resistance to bridge it, but they can't. They are trying now, very strong candles, but they're still just barely to get through. But we'll see, give it a time, because they need time.
That makes sense. It seems like the buyers are pushing, but they're struggling to break through that resistance. The strong candles show intention, but the market is hesitant. It's a waiting game now to see if the buyers can build momentum and push through, or if the resistance will hold and reverse the move. Giving it time is key, especially in a scenario like this. Let the price test the levels and see if it eventually breaks or if there's a rejection. Watching for signs of follow-through, like another strong candle or a change in volume, will give you the confirmation you need. Are you focusing more on the timing of the breakout or watching for a reversal setup if they fail to push through?
I moved the chart up to 15 minutes, the universe above the 5 minutes, to look more clearly on the higher time frame.
Got it. Moving up to the 15-minute chart gives you a broader perspective and helps you focus on the bigger picture, which is important when you're watching price action around significant levels like resistance. It allows you to spot trends, momentum shifts, and patterns more clearly than you would on the smaller time frames. At this point, you're probably watching for a clean break above resistance on the 15-minute chart or signs of a failure, which would indicate a potential reversal. If the buyers don't manage to push through, it could set up a good opportunity to take a trade in the opposite direction. How are things looking on the 15-minute now? Are you still seeing the same struggles with resistance?
I see more clear picture because this market belong to the seller, and the buyer try They must, because in the higher time frame, like let's go to weekly. Weekly said that they are overextend down into the other side of the the world. I mean, I exaggerate that they are very low extending on the weekly. Not to mention about the monthly, we can go there as well. The monthly is like nothing in the left side hand say that there is any price there. They are totally train running down, and they just break out from the last low of the price and then move to another lower low. That's the monthly, weekly. And when I come back to the 5 minutes or 3 minutes, there are buyers naturally want to go up to the north.
It sounds like you're seeing the bigger trend and market structure clearly now, especially with the lower time frames giving you more context. If the market is in a strong downtrend on the weekly and monthly charts, that puts the price action you're seeing in the 5 and 15-minute time frames into perspective. The buyers trying to push higher are likely facing a lot of resistance because of the strong bearish pressure from the higher time frames. When the market is overextended on the weekly and monthly, it suggests that a retracement or consolidation might be due. But the prevailing trend on the smaller are really tuning in to the overall market structure and potential reversal zones, which is key for making the right decision. If the buyers fail to break through resistance and you're seeing rejection at these levels, a short opportunity could be setting up, especially since the higher time frames are confirming that the trend is still down. Do you see any early signs of that rejection, or are you still waiting for more confirmation?
When I see that, I don't know, because these buyers are trying to go back to save the distance to go low, and at the same time the seller are being so overextend from the weekly and monthly, so they need to put the foot out of the pedal to push the price down and let those guys decide what they want to do to move up the price. That the big player will not do anything, just let the price move back to the place where they get a good price, discount price, for them to smash the down again. That's what I can see.
It sounds like you're seeing a classic battle between the buyers trying to bring the price up to a level where they can get a better price, and the sellers who have been in control but are now possibly looking for a bit of relief or consolidation before they continue the downward push. The sellers have had a strong run from the higher time frames, and they might be waiting for the right moment to re-enter, probably after the buyers have pushed the price up enough for them to get a good price, as you put it. At this point, the buyers are likely just pushing up to get those better entry prices for the sellers, which is often seen in markets after extended moves. You're waiting for the sellers to take control once more, and when they do, that could be a strong move down again. This kind of situation could lead to a setup where, if the price reaches a certain level, you could get in with the trend once it resumes. Are you considering waiting for the sellers to show their hand more clearly? Or are you ready to take action if the buyers fail to hold the recent gains?
Today, I'm trying to look my way to find a pair that train run, not sideways market. But it's look, I'm come to a higher time frame of 1 hour across the board of Swiss franc now, and I see more clearly why these buyers try their best to move the price back up, because the last time that there was hit, the price dropped like a waterfall. And Aussie Swiss franc, I can see there's 2 leg down with a little bit hiccup and straight through this level now where they fight on the sideways market.
It seems like you're seeing the bigger picture now, especially with the buyers trying to push back up after a significant drop. The sellers have had control for a while, and now it looks like the buyers are trying to take back some ground, likely after that waterfall move you mentioned. The market can sometimes be like a rubber band. After a sharp drop, there's often a snapback or retracement before the sellers can reassert control. In these situations, it's crucial to see if the buyers can hold their ground or if the sellers will step in again. Given that you're looking for a trend, not a sideways market, focusing on when the buyers lose momentum or when the sellers regain control could be key. You're also noticing that the switch from the sweeping is getting too low, which could be an indicator that the sellers are running out of steam for now, but it's still about finding that entry point where the trend really shows itself again. The price action from higher time frames, like the 1-hour chart, will definitely help guide you in deciding whether to stay on the sidelines or enter when a clearer signal shows up. Are you thinking of waiting for a confirmation before entering? Or do you have a specific level in mind for a possible entry?
For me, if I entering now, I will maybe dealing with the haywire, burn backfire on me, because the buyer I just start to get the range, the signal of the range, and especially I'm looking at New Zealand, the Swiss franc, where on the top side of the currency right today. But when I look at 1 hour, I can see that the big red wick on the red candle, when they trying to reach the price back to this 50% pull back, they just drop like good rejection. That show that the seller waiting to get a very good price, but this is just a dash of evil. It's just one dashing, like to grab a stop loss hunting or whatever. Or anyway, they're pulling back down again very quickly. That throw a lot of emotion for those who get to this stop loss hunt, and then the price go in the way up again to the north to visit this the high level of the wick where they was there, which is about 50% pullback if you think about from the first ignition, the guy who started of the seller to where it's bouncing back. It's like they need to have a distance of 50% before they gonna smash the price down again if the seller not in a hurry or desperation.
You're absolutely right to be cautious right now. It sounds like the market is in a bit of a tug of war between the buyers and sellers, with the sellers trying to take advantage of a good price at the 50% pullback level. The big red wick you're seeing indicates that the sellers are ready to step in, rejecting higher prices, but the buyers are also putting up a fight, attempting to push the market back up. This type of behavior can be dangerous if you enter too early, especially if the market is still in a range, as you mentioned. The price could easily snap back in either direction, potentially catching you off guard. The stop-loss hunting you described is typical of those times when the market tests levels, grabs stops, and then moves back in the opposite direction. It seems like you're waiting for that confirmation before committing, and that's a smart approach. Once the range becomes clearer and you see a stronger indication of where the market might break, either above or below the range, you'll have a better idea of where to position yourself. With the sellers seemingly waiting for a good price before taking control again, the market might still have some room for this back and forth. You're right to wait for the proper entry signal rather than rushing into a potentially volatile situation. Are you watching for a specific candlestick pattern or price action that would give you the confidence to enter, or are you waiting for a certain level to break?
Just a sec, somebody coming. I will be right back with you. I have to pause this thing.
It sounds like you're asking it.
Alright, I'm back. Are you there? So, I look at it 1 hour now on catch Swiss franc. It's also have a long green candle, but with the wick on top. So go back to US Swiss franc.
Sorry, I'm having issues right now. Our systems are experiencing heavy load. Please try again later.
Okay. I'm at the Swiss franc.
Take care.
So everyone is have a hard time for 1 hour. Oh, this is Bitcoin. It's good to look at Bitcoin to 1 minute drop. Let's go whole picture.
It seems like you were about to say something. What's on your mind?
No, I'm just looking around for Bitcoin and everything because I'm just starting to observe the market before I can find a good setup.
That sounds like a good plan, giving yourself time to observe the market before jumping in. Have you spotted any potential setups for Bitcoin, or are you still waiting for clearer signals?
The Bitcoin is